Alrighty, folks. Mr. Warren Buffett and Charlie Munger had their Oracle of Omaha event, the Woodstock of Capitalists, this weekend. Wanted to ask Taylor what his takeaways were and share a particular quote that I thought was interesting. How you doing, buddy?
I'm doing great. Yeah, it was interesting. I thought that they did a nice job, as they always do. Didn't make as much broad economic commentary that I thought they would. And that was indicative also of their annual letter, which didn't do it as much as they normally do as well. But just the stuff that comes out of their mouth, they're so punchy, they're so sharp, they're so swift. They kind of cut the legs down on a little bit of the AI fairy dust that's out there and says, I like the traditional intelligence, I think is what Charlie said. But anyway, yeah, go ahead.
So Warren Buffett had basically a question or a thesis around value investing. And basically, Buffett explained value investing. What gives you opportunities is other people doing dumb things.
Yep.
I'm like, exactly. And we've seen a lot of people do dumb things over the last couple of years.
Yeah, I was going to say the second part was that we see more people doing dumb stuff than we have. Yeah, I totally agree, because what happens is it pushes valuations on things that are in the limelight to extremes. So as a value investor, you can look at this on both sides. So as a value investor, you say, hey, if my company that I own gets that light shined upon it, I have to trim as it runs because the value just isn't there anymore. But then naturally, money, if it's going here, is not going here, opportunity costs. And all of a sudden, what you have is better valuations in cheaper places with good operators that you can step in and buy on the cheap. And then when the pendulum swings back from the tech sector, which is ultimately what's driving all of the growth of the S&P 500 this year. If you take 7 companies out, it's negative. If the money's not going there and all of a sudden starts to look for a new landscape to sit upon, then your companies can obviously get that massive tailwind.
Yeah. And again, in a real estate segment, I thought that was wonderful because, again, in my world, the dumb things were limited partners piling into brand new syndications. We already saw $100 million blow up in a Houston apartment deal, more of that coming. And not to be outdone, I think there's going to be an Airbnb bust. There were a lot of people that bought based on, I don't know, valuations or attendance or whatever you call occupancy from 2020 and 2021, very bad years. They bought in second markets with weird debt. And there's going to be a lot of people that get hurt there. So I just love that because, again, that's exactly what happens is in real estate. A lot of people just assume it's easy. They pile in, it gets crazy. I run away and then it blows up. And then you go back in and you pick over the scraps and you see what's left.
It's interesting that you mentioned the Airbnb. I don't actually spend much time on social media. I generally just kind of get on and get off it because I spend too much time posting my own stuff. But one of the things I do perpetually see just on my homepage as I land on that is people that are 25 years old, 35 years old, that are loaded, driving Rolls Royces, driving these crazy cars. And then they back into their story of they own 19 different Airbnb properties that are all leveraged to the gills. And they have a management company. They're not dealing with themselves. Their life is so easy and they talk a lot about it and it's all taken care of for them. The banks finance their projects. That's exactly right. There's no such thing as a free lunch. There can be for a short period of time.
Yeah,
but I think your Airbnb comment is really sound. And it hasn't come home to roost yet because although we're fighting inflation, we've done a really good job on the goods front, bring down the cost of goods.
Correct.
The cost of services has not rolled over yet because there's still a demand outstanding for that. The Fed's gunning for it. The Fed is actively saying we want leisure and hospitality to slow down because that's what's spurring on inflation right now. And when that happens, that is that Airbnb owner.
Yeah. So I guess one thing as we wrap up our discussions today, I think that session went on for like 4 hours. They divided it up because, these guys are old, right? I think Charlie's like 99 or something.
Yes.
What were kind of the other takeaways you'd have from this weekend's discussions that you saw?
Yeah, I think it's just the overall kind of somber mentality that they provide that speaks to long-term investing, speaks to actually understanding. One of the things I disagree with them on. So Charlie talked about diversification.
I saw that.
Right?
Yeah.
And I think it's a very fair point. It's a valid point. There is a point where you can over diversify, but Charlie doesn't realize that they are doing fundamental analysis on companies. So he talks about, hey, if I only have 3 good ideas of 3 great businesses, that's all I want to invest in. And what I want to say to Charlie is like, the people that you're speaking to largely and broadly don't do any fundamental analysis.
Yeah,
They don't know
exactly.
which 3 great companies are. So they have to diversify and spread their bets, because if they just go out and buy Tesla or Tesla and Nvidia, Tesla's, taking on the chin right now. Nvidia's doing great, but nothing to say that that couldn't roll over. Like, there is absolutely value to diversification. And I think that unless you're doing fundamental work, which is what they're doing, diversification is the name of the game, in my opinion.
Yeah, the one takeaway for me that I had is when Warren Buffett talked about Berkshire Hathaway's earnings and basically admitted that the next couple quarters aren't going to be great, that his
Yeah.
managers were like, that
Yeah.
surprised us how quickly that turned. Because again, my thesis was March 12th, March 13th, the consumer got scared. The consumer gets scared, they stop spending, and that's going to ripple through. And Buffett basically said his managers were shocked at the consumer change so quickly.
Yep. And he outright said earnings will be negative for the companies that we own. And it was interesting for him to be so blunt and honest and straightforward with that, because obviously there's a response on the back end to what he says to the underlying value of the companies that he owns, because people herald everything he says. And he said, listen, face the facts, look at the numbers. And that's one of the things that, like, I'm trying to pull my hair out right now, because I can't figure out why the market continues to go up. Besides the fact that 7 companies have mentioned AI 50 times on their conference calls, and people think it's going to absolutely, revitalize and rejuvenate the economy as a whole. I have questions about that. I also, like to point backwards and say, like, don't you remember virtual reality that was
the
heralded
metaverse
last year or the year before? Yeah, the metaverse. Like, what happened to that? And I'm not saying AI isn't going to be useful and create further efficiencies. It certainly will, but it's acting like it's going to solve everyone's problem on the globe right now. I'm not sure that's the case.
Yeah. Taylor, where can people follow you?
Yeah, follow us at Life Goal Investments. It's we're on Instagram and TikTok, putting out daily stuff on markets.
There you go, buddy. Thanks.